Hi everyone, welcome back to Atrium Research's YouTube channel. Today I have the pleasure of interviewing Juan Sandoval, the CFO of Andean Precious Metals, which trades under the symbol APM on the TSX. We recently initiated coverage on Andean roughly 2 weeks ago with a buy rating and target price of $3.50 per share. JC, good to have you here today.
Good morning, Ben. Thanks for having me.
So to kick it off, I'm going to leave it to you to walk through the company presentation, go over the story top to bottom, and then we can get into questions afterwards.
Sure, thank you. And I assume you can see my screen, so I'll get on it. Obviously, we have some legal disclaimers as we might be making forward-looking statements. I'll start very quickly, Ben, with the history of our company because it's truly a compelling story. Our founder, who by the way is still the largest shareholder, executive chairman of the board and CEO of the company, so very much involved in the company. He bought in late 2017 what it still is the largest oxides commercial plant in Bolivia. He bought it from Coeur Mining, and he bought it when the life of mine was less than a year. What he saw was the possibility, because of the location of where the plant was to not only focus on its own deposit, but start processing historical waste stockpiles throughout Bolivia, and also purchasing from other third-party players like the cooperatives, artisanal miners, other private and public companies. And long story short, it became a great success. So over the course of the next few years, we are able to have a pretty much stable production profile of around 5 million ounces of silver a year. Fast forward to 2023. Thanks to that, we were able to build a very strong cash balance. We had close to $100 million in cash with no debts or streams, royalties, off-balance sheet commitments, so pretty clean balance sheet. That allowed us to start thinking on probably diversifying ourselves, particularly from the jurisdiction standpoint. So in 2023, we started mapping the region, the Americas, to look for assets to buy. Thankfully as well, it was a strong buyer's market, meaning it was a high interest rate environment with low liquidity. And us having a lot of cash on hand, it helped us to open the scope of all the opportunities that were out there. So at the end of that year, in 2023, we decided to buy our first asset outside of Bolivia. We bought a gold-producing mine in the United States, in California, which I will talk about it in a minute, but ultimately it was a great acquisition for us. And last but not least, earlier this year, we finally uplisted ourselves to the TSX, which obviously is broadening our scope of potential investors, and it's more aligned to the size of the company now. So right now, where do we stand? We still have our headquarters in Toronto, and we have our gold-producing asset in California, around 54,000 ounces of gold production, and Bolivia, 4.5 million ounces of silver in the country. So I like this slide, Ben, a lot because it tells you what has happened from 2023 to 2024. Mm-hmm. We basically doubled the size of our company in every metric possible. We went from a single asset company in a, call it, high-risk jurisdiction, to having two assets, one in a very good jurisdiction, which is the U.S. Yes, it's in California, but this is a fully permitted mine. So actually, we have a very good relationship with the county, so there's really no issues with being in California. We have obviously doubled our production. We went from 62,000 ounces of gold equivalent to more than 100,000 as of December of last year. Obviously, revenues, we have doubled revenues from 125 million to over $250 million in revenue. EBITDA went 5 times from $10 million to more than $60 million. We doubled or tripled our reserve base. We added close to 500,000 ounces of gold reserves from the Bolivian operations. So all of this, we doubled the size of our company while keeping most of our cash, and that was thanks to how we negotiated the acquisition of Golden Queen with some deferred payments and zero dilution to our shareholders, because we haven't used any of our stock, or we did not use any of our stock to make this acquisition. So there was zero dilution to our shareholders, so we have created a lot of value over the course of the last 2 years. Moving on quickly to specifically to our assets. So now we have Golden Queen. It's a 2.5 hour drive from downtown LA. It's paved road. It's it's an easy access to the site. As I said, we have a little less than 500,000 ounces of gold reserves, proven and probable. 800,000 additional of M&I, 5 years of life of mine. But one of the reasons why we bought this company is we really like the exploration potential, and I'll actually go to that slide. Within our contractual boundaries, we've identified several veins that we are actually already doing some exploration that we started last year. Actually, earlier this year, we announced some of the results of the first phase of that exploration campaign. And basically, the results are very, very promising. Basically, what we're showing is the continuation of the mineralization along the main pit. So this is very good news. We will continue we are underway on the second phase of that exploration campaign, and we are very positive of the results that we're seeing. Our objective is to be able to extend the life of mine of Golden Queen, and we feel very comfortable with that. I'm not going to go through this slide. All of our information, as you know, is on our website, but these are some of the initiatives we have during our due diligence process that we identified as optimizations, and we are well underway on some of them. And I invite you all to have a look at what's there. Some of them, like I said, are well underway. What we would expect from all of this is to have a more stable operation down the road. There has been an important CapEx plan for Golden Queen last year and continuing this year. But like I said, this should all translate at a more stable production profile for the coming years. Moving on to San Bart, what's important about San Bart is late 2023, we decided to finally stop mining from our own deposit. Now everything that goes into our plant comes from third-party purchases. So we freed up that capacity of very low grade ore, and we're buying more everything is coming from third-party purchases. A little over 50% of that comes from long-term contracts, which are the contracts that allow me to put them into my technical report, and that's what you can see with those 4.6 years of life of mine. But honestly, that's less relevant because the other 50% comes from third-party short-term or spot purchases. So really, if you really take into account that only half of it comes from those long-term contracts, really my life of mine could be more than double, right, if you take into account those short-term or spot purchases. And by the way, and I'll go to this slide. This slide tells it all. It's all about the location of our plant. We're in the Potosí region. It's a mining district. They've been mining for over 500 years there, and there's a lot of opportunities where you can buy from third parties. There's a lot of, like I said, cooperatives, artisanal miners, and we believe we can keep operating for a few years to come. Obviously, our sustainability community is very important for us. We contribute a lot to our communities in Bolivia. 25% of the local economy of the city of Potosí's economy is coming from our company. Almost all of our employees, except for a few, are Bolivians, so we contribute to our communities, we pay our taxes. We're very committed to the sustainability in Bolivia. We will continue to do that going forward. Moving on, this is an important slide because we're very unique from the capital structure, from the shareholders' standpoint. As you know, our founder still owns the majority of the company. He owns around 54%. Eric Sprott, who everybody knows very well, he owns 15% of the company. So between our founder and Eric Sprott, they own around 70% of the company. I think this is a very positive news, Ben, because the two largest shareholders are very committed to this company. And the remaining 30% is it's either the institutionals or it's mostly retail. Talking about our market cap, I mean, our stock price has significantly increased. We have almost doubled the stock price in 2024, and I think we're over 50% this year. So I think the market is recognizing the story I'm telling you right now. We have, like I said, we have a very strong balance sheet, over $80 million in liquid assets, and very manageable debt. We have an existing loan with Golden Queen and some leases for the equipment, but it's very manageable debt. This is a new slide we just added to our deck. Well, as you know, yesterday we released our year-end numbers, and we presented record revenues of $250 million, record free cash flow of over $35 million. And this is despite important capital expenditures, particularly at Golden Queen. We knew that we were going to have to invest at Golden Queen. We invested close to $30 million. Again, that was done last year. We'll continue this year, but we expect a more reliable operation on the road. Consolidated production is 106,000 ounces of gold equivalent. Like I said, strong financial position, $81 million of liquid assets. And last but not least, it's been quite a while there where we haven't seen any health or safety issues in both of our companies. We also announced very quickly our production and cost guidance for this year. On a consolidated basis, we expect between 103 and 117,000 ounces of gold equivalent between both Golden Queen and San Bart. And from a cost perspective, operating cash cost at Golden Queen between $1,500 and $1,800, all-in sustaining cost between $1,950 and $2,150. Why the difference? There's still some CapEx investment to be made at Golden Queen, and I'll talk about that in a second. And San Bart, as you know, because of the processing facility nature of our business, we use a cash gross operating margin and a gross margin ratio to measure the performance of the company. So it's between $6.5 and $8.4 per ounce, and the margin is between 29 and 36%. CapEx, like I said, we still have an important CapEx plan underway this year, mostly going through Golden Queen. Part of it is sustaining, part of it is non-sustaining, but between $28 and $32 million in total will be spent this year. And to wrap it up, I think we're very well positioned to keep growing the company, whether organically or through M&A. We have a strong balance sheet. We've proven we have shown a good performance with all of the investments we have done, particularly at Golden Queen. We expect a more stable production profile down the road. I think that concludes the slides, Ben. I don't know if you have any. Should we go into any questions?
Yeah, we can do some Q&A now. Feel free to stop sharing your screen if you wish.
Thank you. Got it.
And yeah, thanks for that. You hit on pretty much all the points I had. But maybe we can elaborate on a couple things. So at Golden Queen, obviously extending the mine life is important, and you did talk about the exploration program that's been ongoing, with some results being reported earlier in the year. Can you just talk about what that exploration program looks like in 2025, if there is a defined meterage that you guys plan on drilling, and then ultimately, is there timing around a resource update that investors should be looking out for?
Thank you, and I think that's a key question. I think ever since we acquired Golden Queen has 5 years of life of mine. We know that's not enough. We know that investors look at cash flows and life of mine. I guess if we're a producing company, really nobody doubts about cash flows. We have a good operating cash cost. We're building a lot of cash. So the other one is the life of mine. When we bought Golden Queen, we knew that it had a relatively low or short life of mine, but with a great exploration potential. Like I said, we started an exploration campaign last year. We allocated $2 million last year. We allocated $2 million for this year. There are some veins, particularly there are 2 veins, the Alpha Zone and the Silver Queen veins that we've started working on. Earlier this year, we announced the first phase of that exploration campaign, and again, it looks very, very promising. We are well underway on our second phase. As you know, we also brought Johan Bouchard, our new president of the company, who used to be the COO of Yamana and New Gold, and he has been one of his priorities is to focus on making sure that exploration plan goes along the plan. So hopefully, Ben, and we're optimistic about that sometime this year we will continue to be updating the market as to where that exploration plan, how it's going. Hopefully, there'll be our ultimate objective is to be able to update a new technical report. We need to work, fine-tune the timing of that. But I would say, Ben, that's the top priority for our company right now. Get that exploration plan concluded. Like I said, bottom line is that what we're seeing so far is very promising.
Yeah, that's great. And correct me if I'm wrong, but there was limited investment in exploration done over the last few years from the previous operator, and so there lies some opportunity for you guys and some low-hanging fruit on the exploration side.
Absolutely. That's again, like I said, when we did a very thorough due diligence, it took several months, almost a year, to complete the due diligence on that company. And yes, we noticed there was a lack of proper investment, especially on the exploration front, and the possibilities, right? I mean, it does have, from our perspective, very good exploration potential, right?
Yeah, and that sort of leads into my next question about Golden Queen, and it's been a pretty quick turnaround for you guys from acquisition to implementation, and obviously cash flowing the way that you did in your first full year of production last year. So with regards to the capex that you spent last year, the additional capex that you just mentioned you're planning to implement this year into the project, what are some items and initiatives that you guys are working on that investors will actually see the fruits of that labor? I know we discussed yesterday on the call some equipment upgrades, things like that, and then down the line that should ultimately yield some fruit from an operational standpoint.
Yeah, when we acquired the company, we knew that there had been some lack of proper investment, particularly on overhauls for the mobile equipment, things like that, right? We spent close to $30 million last year on Golden Queen. We made a very thorough analysis late last year to see what the plan was going to be for this year. But Ben, fortunately, we're in a high commodity price environment that's helping us. I mean, even despite this big investment we did last year, we built cash at Golden Queen. We ended up with more cash than what we had before that we started that capex plan. We expect the same thing this year. We're actually, thanks to the good commodity price environment we're living in right now, we're accelerating some of the capex that we're actually planning for 2026. We really have that counter-cyclical mindset, right? We're benefiting from strong commodity prices. This is the time to to invest. They're investments that we know we needed to do. I mean, for example, we replaced the whole truck fleet, right? We're buying 2 more trucks this year. We would have completely replaced the whole truck. That translates into, they're bigger trucks, bigger beds, better, more fuel efficient trucks. All of those things will translate into having not only a better production profile, but have better margins, right? So it's things like that. It's really having that counter-cyclical mindset. It's the time to invest, but at the same time, we're protecting our balance sheet, right? We still have good, cash on hand. We'll have more cash on hand as well. And unfortunately, production is going well. There's room for improvement, yes, but we're also not only focusing on the production, we're also focusing on improving the margins, right? So it's going well.
Great, yeah, and certainly gold at $3,000 helps with some of these initiatives.
Absolutely.
So pivoting over to San Bart, and you did sort of discuss this a little bit, but around the production, it's been a little bit lumpy over the last couple years. So maybe, and I know there's been some changes, maybe you can explain to investors why that lumpiness has happened, and then what we can expect going forward, 2025, 2026, and so on.
Yeah, thank you, man. That's a very good question, because bear in mind that prior 2023, we were a traditional mining company. We were focused on our own deposit, right? And when we started, as I told you before, in 2017, when the mine had 9 months of life of mine. It's been 7 years later, and we were still mining from that deposit, but it got to a point where it was really depleting. We weren't really making money from our own deposit, so we shifted, and we wanted to free up that capacity on our plant, be able to bring better ore from third parties. So there was a shift, first of all, from being a traditional mine to being a processing facility, right? So, that obviously affected my operation. I would say that's a key thing that we need to consider when talking about the stability of our production profile. Then another one that, for example, affected us last year is as we in 2023 we decided to start reprocessing our tailings, right? From our FDF, our fines disposal facility. It's low grade, but it's cheap, right? Because it's literally right there. You just got to pick it up and process it, right? We had some issues last year with our FDF because we were literally picking the upper part of our tailings, which was the lowest grade, which came from the latest activity we had from our own deposit, right? But it was very low grade. So once we get to the bottom, the deeper part of that of our tailings, we will be able to get to the grades that we're thinking. It's still low grade. It's 50 to 60 grams per ton. But once we go through that upper layer, very, very low grade, I think this year we will be able to see some improvements on our FDF production. So I think that was another reason which affected us on our overall production. So I think this year what investors should see is a more stable production. I mean, you can see our guidance. I think we would expect something 4.5 million ounces or more, but a more stable production profile, right?
Right. No, that that makes sense. Excuse me. And then my second question, and I know you already touched on this as well a little bit, but with regards to the existing resource at San Bart, can you explain firstly how that resource is calculated, and then discuss the difference between the long-term contracts, the short-term contracts, and then I'll even point this out. Many of these ore processors that exist out there don't provide a mine life or a resource. And so you guys are sort of a step ahead in that you do have these defined long-term contracts. but maybe you can just explain that for investors in a little more detail.
Yeah, absolutely. And I mean, you cover some of those processing facilities as well, so you'll know what I'm talking about. If you look at my deck, it shows a little less than 5 years of life of mine. That's what I have with respect to long-term contracts, right? But that's rounding numbers. That's around 50% of what really goes into my plan. The other 50% is short-term contracts or even spot purchases. But it's clear to point out it's not like I'm waiting at the plant to see what comes. No, there's a big logistics behind it. If you saw on my deck, there's this slide where it shows the map of where we are. There's a big logistics. We know exactly what's out there. We know what to send, what comes in, what goes out, right? So if you take into account that 50%, well, rounding numbers, 50% of my production is coming from short-term or even spot purchases, then that for a little less than 5 years of life of mine could double.
Right.
So in a way, as a processing facility, the life of mine is less relevant. That's why, Ben, and you know that. That's why it's all about the location, right? And this is a very rich mining district, and we're talking about a radius of 500 kilometers. And I think the opportunities and the potential is there to continue working as a good processing facility, right? So I think
Yeah.
it's important to make that distinction, right? We are not a traditional mine in Bolivia,
Yeah.
mining company in Bolivia.
No, that's great, and that is helpful. And I think, again, from an investor standpoint, we don't, consider too much concern around the resource, right? There's lots of artisanal and quite sophisticated miners out there that are looking for processing plants like San Bart, and so I don't imagine you'll have too many issues there. And then the last thing, and it's around the cash that you have, and then obviously in 2025 you're going to be cash flowing quite heavily. In terms of other growth initiatives, what's sort of your plan with capital allocation and cash allocation going forward?
Yeah, that's a good question. Thank you, Ben. Well, first of all, I think it's part of this company's DNA to have a strong balance sheet, right? So to the extent possible, we'll always try to keep a good cash balance. We work with commodities, and there'll always be commodity cycles, and the best thing you can do about it is to keep a strong balance sheet. I know that's difficult to say, but like I said, because of the evolution, how this company has performed over the last few years, we've been lucky enough to have that strong balance sheet. So first of all, we'll always try to keep a strong cash balance, to keep a strong balance sheet. And secondly, yes, I think that we're becoming very good. Before the acquisition of Golden Queen, we looked at over 100 different deals. I think we will continue to work definitely organically. Like I said, there's good opportunities to keep growing, to improving our operation at Golden Queen, keep our business in Bolivia through better purchases of better grade, better ores. But to the extent there is a good opportunity on the M&A side, we're well positioned for that. It's still, Ben, it still is a high interest rate environment. There's still low liquidity in the market, so it positions us well to look for another acquisition. What are we looking for? Obviously, we have said we're a more North American focused company. That does not mean we would not look at assets everywhere. I think we will stay in the Americas. But if there's a good project somewhere else in South America, we'll certainly look at it. Our preference would be the North American market, whether it's Canada, the U.S., and Mexico. And we'll see. I think there are some good opportunities. We now are very familiarized with the market, with the region, where with the opportunities out there, and we'll see. We'll see if there's a good opportunity. We'll look into it, and we'll see. We'll inform the market.
Yeah.
We're open to that.
Yeah, no, that's great. And I think just given the success of Golden Queen, I imagine investors can at least be confident in your ability to acquire assets and turn them around into becoming an accretive acquisition quite quickly. So with that, JC, I appreciate the time. Thanks for walking us and the viewers through the Andean Precious Metals story. Definitely looking forward to seeing what you guys can do in 2025, given the precious metal prices and what you've done so far. For those that haven't seen our research on Andean, you can find it on our website at atriumresearch.ca, and we'll be writing research throughout the year. JC, pleasure having you today, and thanks again.
Thank you, Ben. Nice talking to you.